It's going out there. It's December 8th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down the headlines and tell you what's really moving these markets. Bringing in my buddy Daniel. How's it going?
Frank, it's going good. As always, it's another good week on the island.
Yeah, you know, it's been pretty crazy markets, right? I mean, the past few trading days, 2-3% moved in NASDAQ. Do you know how much the NASDAQ was down before this, nice move up that we've seen and rebound? Well, Omicron's not that bad anymore, but it was close to 7%. Do you believe that?
Only because I saw the Dow was down 6 from its all-time highs, so I figured the NASDAQ a little bit more volatile had to be. Yeah, but it was a quick, Is it glass half empty of me, Frank, to expect a future headline that, maybe this variant is a little bit more deadly than we thought? Because inside of a week, we've gone from, oh my goodness, let's sell everything off to, hey, now everything seems to be pretty much better. Yeah,
we've gone from let's declare a state of emergency and force vaccines on young children in New York to, hey, you know what, it might not be too bad. And I think the current vaccines work and you're going to be fine. So, again, we're in a world where overreaction is necessary in order for companies to generate profits, and we should all know that by now, which we saw through the last election cycle. It's pretty crazy, and even before that. But, look, there's a lot of companies that are doing well, right? I mean, we saw AutoZone report solid numbers. McDonald's a new high, Intel spinning off Mobileye, so it's getting a bounce. In the meantime, we saw companies like DocuSign get destroyed. Some of the high growth names get destroyed, where, look, the Fed's raising rates next year, right? That's a big change of pace where they're like, no, we're going to do it earlier than expected. Tapering is going to finish probably in March. So, what that means, you're taking leverage out of the market. So these companies that have, $10 billion market caps, $5 billion market caps, and they're generating $1 million in sales or less than $1 million in sales, you're going to see a lot of those names get hit. And that's really what you're seeing right now. It's pretty crazy out there.
Absolutely. Markets are forward-looking, as the old cliche goes, which they should be. You should try to get ahead of the game here. It'll be interesting to see on rates because you got to be careful taking these people, politicians, I mean, at face value, even what they say, because they lie a lot, Frank. You know that. They lie well.
Yeah. Transitory.
Exactly. See? He said that for how long?
I must have said that for 9 months. I think that's the number one word that I've said in my podcast. It's going to be transitory. You got to be fine.
Exactly, yeah. And then now it's not. And that's okay, too, because, well, that's the world we live in. I don't see how they're going to raise rates. Like, I think he's hinted a lot more at raising rates more quickly than what they actually can or will, I guess. You remember the tantrum. I can't even say it.
Yep. Taper tantrum.
Of 2018,
tantrum, yep.
Right? And that... it's easy to look back and say this, well, hey, the markets bent the hand of the Fed and they gave in and okay, well, we won't do what we said we were going to do. We're going to keep the easy money policies. I don't think it's a big deal for valuations to come down. It sucks that it happens so quickly and causes panic. A lot of that's driven by, headlines and other things. And I know you don't like to harp on the Fed, Frank. I know how do I say this nicely here? You like to point out how everybody uses the Fed as a punching bag. But I would like to point out, it's not that you don't agree with them. It's just that you got to live in the world we live in. Is that fair to say?
That's fair to say. I mean, that's the thing. I don't want people to think you're giving them a pass, I guess is my point. Because they are awful. They are responsible. They are terrible. Yeah.
Okay.
No, that's fine. But it's that, no, that's fair to say. But I think that's the problem with people where, I made that mistake in 2010, not getting into the market a little bit earlier until I heard David Tepper say, what's going to go higher? Everything's going to go higher. And I was like, holy shit, this guy's right. Instead of saying, wow, you know what, housing, how are these people going to get money? Well, you have easy money and then you start handing out money to people, even directly after COVID and stuff. We have inflation and inflation's here. I think the Fed's going to have to raise. They don't have a choice. I think they threw in a towel now. We have crazy inflation. Crazy inflation where asset prices have been at record highs for 3 straight quarters now. And even going back to, again, COVID, I get it, right? That's an extreme black swan event. But when you're seeing every single asset class at all-time highs, it's time to start raising freaking rates, right? I mean, come on. It's common sense. Forget about it. I know the politics and shit like that. But now look what you're doing. Now, I mean, not only that, the policies in place to limit the amount of oil drilling is going to result in, energy prices skyrocketing, continue to skyrocket. And that has a bigger impact than anything, right? In terms of impacting all of us, all consumers, where we see that, whether it's we're heating their homes or cooling their homes, even in Florida it's still pretty nice here in December, or, filling a car up with gas, which I'm seeing, which is crazy. And then you throw in all the prices, man, I go to restaurants now, stuff that costs $25 costs at least $40, $45. It's not like 6-7% inflation or 8% inflation. I mean, you're seeing like 20, 25%, 30%. It's pretty crazy, and it's going to be interesting in 2022 because you can get away with that when you have low interest rates and you purchase some bonds and, it's liquid and you have, crazy market that's just flooded with cash. But when you're removing that and taking leverage out of the market, now you got to say, holy shit, this could be a really big deal. And it's going to result in people closing their wallets, less profits, less borrowing. And, that's going to hurt a lot of companies, whether, it's just doing a simple math. It's going to hurt a lot of companies. There's going to be a lot of leverage coming out of this market. And you're going to see in 2022, it's going to result in a lot of volatility. But like you said, Daniel, the good news is, ever since the credit crisis, what happens? When back in the day when the market used to crash, it used to be 2-3 years, with the tech bubble, 2000, 2001, 2, 3 before the market came back. Now it's like the credit crisis. That was like 13 months, 12 months. COVID was like 3 months, right? All these massive downturns, if you look over the past 10 years, these 20% declines happen in like weeks. And then immediately, like you see that snapback. So the good news is, when this thing crashes, it hurts, but, it's not like a constant crash. It's not like a long, drawn-out crash anymore, like that happens over a 3-4 year period, even over a 6-month period. It just happens, and then it seems like people just go in and use that as a buying opportunity, which, we're kind of seeing again, which, I don't know. It's different circumstances, Daniel, now that, the Fed's there to, that Goldilocks economy to be there to hold you if you fall. We're always here. The Fed's not there anymore, right?
Well, they are. They're saying they're not going to be there. They're still there.
Well, they're still there, but they're raising rates, right? Yeah. The only way to combat inflation is raise rates by taking money out of the system. It's not like the Evergrande situation. It's not the credit crisis where, hey, just whatever. What is it? What do you need? What do you need? How much? 1 trillion? 1 trillion to 2 trillion, do you say? Oh, 2 trillion? Okay, we'll give you 2 trillion. All right, you're good. You're fine. Okay. No, it's not one of those environments. It's like, no, we got to take money out of the system or inflation is going to go through the roof, because inflation by far is the biggest risk any market could have. If you look at Venezuela, you look at us in the 70s and 80s, it's the biggest risk by far, because the only way you can control it is by forcing a recession almost. And that's where we're at, which is crazy. And then what happens? We see risk assets and even Bitcoin. Bitcoin sold off a lot too, right?
It did. And one thing on the Fed, I don't disagree with anything you said there. I just want to point that out, because why do you have these massive pullbacks in a matter of days or weeks instead of months or years? Now, we're not saying that it couldn't be a choppy market for a couple of years going forward. We're not saying we know the future. We're simply pointing out that you need to know what's behind the atmosphere and the price action in today, in my opinion, because last week over Thanksgiving, when the market was really selling off hard, not that it's easy to watch prices go down or your portfolio take a big hit or subscribers getting hurt, but when you know why you own something and what you own, that's a big deal. And I pound the table on this. Money is emotional, so you want to know this. The reason you have more volatility and all this is because you have massive amounts of money sloshing around. So at least know what the Fed is doing and what they're saying they're going to go back on or change routes. We'll see how and how often that plays out. The big pullback in crypto, to your point, exactly right. I had a few friends ask me about this. And again, the fun thing about doing this every week, Frank, is you stay in touch with your subscribers and listeners. The bad thing about doing this every week is there's not always something new to point to, in my opinion. There's always news. There's always headlines out there. There's always something happening. Don't misunderstand. But if you're searching for, hey, why did this go from 62,000 to 42,000 in a matter of days, take your pick. And you're basically going to come down to a fundamental belief of where your core values are with Bitcoin. The way I look at that is nothing has changed for why Bitcoin is rising like it is over the past several years, meaning it's an inflation hedge, it's sounder money, there's a limited value, and you have tons and tons of capital from all types of big and small investors moving in. So if it helps you when you see Bitcoin going down, to your old point, you might have too much if it's really keeping you up at night. You might have too much exposure, so diversify or kind of do some soul searching there. But just remind yourself, hey, is anything changing? And if not that I'm a perma bull, but it's easy to be a perma bull on this asset class when you look at why it's going up because of everybody else's actions, i.e. the Fed, risk on, risk off type mindset. So, it's got a great bounce back. It is crazy volatile, but Is there anything that's changed over the last 2 weeks in crypto other than the price, Frank?
No, nothing really.
And is there anybody?
China is going to announce they're going to ban crypto again, I think.
Oh, nice. Is that maybe we do have a crystal ball, because I could say that's probably going to happen.
I think what they do like 6-7 times this year already. We're really going to ban Evergrande. We don't want any money to come out. We're really banning. Now we're taking it away from banks. We're banning it. But it seems like that same story keeps coming out. But when I look at Bitcoin, I say the same thing. Look, in 3 years, I think it's going to be a lot higher. It's a massive market that institutions were late to get in. They have to get in because their clients want it, and because it accounts for a $2 trillion plus market now. So this is a major, major market, and you have the most innovation coming through there, where the metaverse is going to run through crypto. DeFi is disrupting Wall Street. It's disrupting security tokens, is disrupting our financial systems. This is here, this is now. This is where the innovation is coming from. And there's a lot of venture capitalists, the smartest in the world, Anderson Horowitz. I mean, they're investing like crazy. There's probably about 70, 80 different deals that were invested in. You look at NFTs as well. Again, it's not just like stupid art and stuff like that. It's bigger than that. NFTs within the metaverse, just properties being sold, just lots and lots of stuff, right? I mean, you mentioned that and numbers and stuff. We'll talk about that another time. But when I look at Bitcoin, I look at a 3-year time horizon and say, look, 3 years, I think it's going to be a lot higher. I don't know what's going to be next month and next year. I know it's going to be volatile, but that's why if you're going in for the first time, buy a little bit. Okay, do it through a Coinbase, do it through whatever. If you are, if you're into crypto, you can get a lot cheaper in different sites, but that's one of the easiest and the safest when it comes to Coinbase. And buy a little bit, and then, this way it's not keep you up at night. When it comes down, you could buy more and add to your position and hold it, because you want to be in this not just next 3 years, 5 years, 10 years. I mean, this is here. This is integrated in everything now. It's not going anywhere. There's a lot of shit coins that I think will get killed, but, look, what are some of the negatives on this? There's really not any negatives now. It wasn't volatile enough. The people didn't believe in it and now they're looking at it, hey, this is a store of value, and a lot of companies are putting it on a balance sheet. But you also have the climate change maniacs, right, who think that, the world's going to end tomorrow. Again, I believe in climate change. We have different opinions on that, Daniel. But for me, I get it, but not to the point where let's not produce any freaking oil or stop producing oil when we don't have alternative to replace it. Why? And prices are going to go through the roof, and you're going to crush our economy. And what it's China doing right after the Olympics, they're going to have, they're building coal plants like crazy. They get cheap energy. It's going to make them 10 times stronger. Nobody cares. We have a bunch of kids holding up signs. Now, the electricity use, I wanted to bring up a stat to you, which I think is amazing, which is kind of funny, right? So Bitcoin, right, they're saying the amount of electricity it consumes is killing our environment. We have to change. And even Elon Musk came out and said, okay, that's true until Bitcoin, use less electricity, right? We got all this stuff. So again, the climate change, people went nuts on them. So right now, Bitcoin accounts for 0.5% of the world's electricity.
0.5%?
0.5% of the world's electricity, right? And holy cow, we need to stop it right now, or the world's going to end. All the technology companies, how big they are on climate change, the amount of money that they're putting in this, one of the biggest investments, again, right, to check off some boxes. It's not like they care, right? Do you know how much data centers, I'm talking about hyperscale data centers, so these are the largest in the world, right? There's about 200. They're owned by, who do you think? Google, Microsoft, Amazon. Do you know how much electricity these things account for?
Probably more than Bitcoin, the way you're setting this up. I like
3% of the world's electricity usage. Now, the best thing, if you don't know what a zettabyte is, look it up, right? Because we're about 40 zettabytes. We're going to go to about 180 zettabytes in 4 years, right? With all the data that's being consumed, all the amount of video, everything's video, right? I mean, people think the cloud is like really the cloud. The cloud's not the cloud. The cloud is servers, right? That are off-site that you're storing all your data information in, right? So this is going to increase by a factor of 3 or 4. Or there's got to be changes in technology, which there will be changes in technology. And if you're a CRA member, you know what technology I'm talking about. But they're going to have to triple or quadruple the size of this to account for all the data storage, all the servers that need to store this. We're going to look at close to 10% of the world's electricity usage. I don't know why nobody brings that up, but you want to talk about Bitcoin, you want to talk about politics. I just think that's an amazing stat because, we have to store more data. We're going to have to store it. Data's going crazy, out of control, TikTok, everything, video now. And what are you going to do? You're going to need more of these hyperscale data centers are going to need to be built. I want to say something really quick because I have something here, which is from, this is from Hyperscale, a website. So I never realized this, but then I'm kind of nerd. I start really going crazy with this thing. So when you look at the power consumption, one of the world's largest data centers, Microsoft, 700,000 square feet of data in Chicago, Illinois, has a capacity to consume 200 megawatts of power. To put that in context, That's enough to power 150,000 homes.
150,000 homes.
1,000 homes.
Okay.
Bitcoin. We got to get rid of Bitcoin, though, right away. So, when we look at this, I just think there's tons of opportunities. This is where I think the most innovation is going to come from. But, and there's lots of names. We talk about Silvergate Capital all the time, right?
Hey, real quick, are you taking a shot at their data centers? Because AWS, Amazon Web Services, was reportedly down, causing a lot of havoc across a lot of different websites today. Little kick them while they're down, Frank. I like that.
Kick them while they're down, yes. But, I mean, listen, if you look at cloud, who are the biggest companies in the world? Microsoft, Apple, Google, Amazon. I mean, you're looking at Apple and Microsoft now together combined have a $5 trillion market cap. These guys are making a massive fortune. And you can look at revenue, but it's not revenue. It's the profits because the margins are explosive when it comes to their cloud operations. So they're going to protect this any way they possibly can. And they need to, right? So the more we store on cloud, the more servers that got to be created. But, again, they control the world, these companies. And that's not going away. There's a reason why that was the safe haven when the market came down. Those Apple, Microsoft hit new highs. Money was flowing into there, or you would have seen an even bigger dip, maybe a 5% pullback in some of these markets with the risks. But it's pretty incredible. But really, really quick, getting back to Bitcoin, because one of the companies we talk about is Silvergate Capital. We recommended this at, I want to say, around $13 a share. It was our cost base a few years ago. This is one that, we saw in our crypto intelligence news that had tremendous upside, and they just did a financing, right, for close to $500 million. And, we saw the stock come down. But again, we recommend this thing at 13. I don't know where it is today, but I know you're a fan of that company as well, Daniel.
Yeah, it's a great story. I came across that, like you said, we came across that a couple years ago, listening to an interview of the CEO. They're a profitable, just old school bank for the most part, but just had one eye open and was, the leader was always looking for innovation and new things to bring to the bank. They got into crypto. They have this Silvergate Exchange Network, SEN, which basically handles back and forth, allows institutions and different clients to 24/7 fund accounts, transfer money, just that borderless disruptionness of payments. There's no 9 to 5 to where, you have to wait on somebody else. And just to give you an example, I was looking, this is back from July, Frank. So this is the second quarter, and we'll get to the capital raise here. I'm sorry, I'm taking us on a rabbit trail.
That's cool.
But the second quarter, just to give you an idea of the growth, they reported in July, the second quarter revenues, and I know they've reported since, but this one just had a good stat. So their Silvergate Exchange Network handled $240 billion US dollars in transfers for the second quarter during 2021. That's 44% higher than the first quarter, the previous 3 months. Okay. And that was over 968% higher than that quarter in a year ago in 2020. Mm-hmm. My point is you went from basically 22 billion to 240 billion in a year, or a little over a year. That is amazing growth. And what does that mean? That doesn't, and you've been on this good, not tangent's not the right word, but, being good vocally about, hey, there's a lot of stuff out there that got rewarded for just growth and now is getting hammered because there's no profits, your Pelotons, things like that. Well, this is a situation where this is the perfect storm because you have a company that's growing like crazy, this exchange network, but they're profitable. Their profits are increasing. And this gives them a lot of optionality to offer different products. But once you get people, just like Facebook, once you get people on your platform, you can figure out how to monetize that over time. Getting them there, you could argue, is the hardest part. So now you got 1 billion some people. This Silvergate Exchange Network is incredible. And it's only going to continue to grow. And even if it stabilizes a little bit, then you can look at monetizing. But that's a great thing. And so the stock was, whatever it was, 12% lower is where they, because you got to incentivize people to come in. So they said, hey, we're going to do an offering. I think it was around 160 in share. They did this at a 145.
Yeah. And
yesterday, it gained all that back. So it opens at 145, pops right away because people want to get into this name.
And it's even up today too. So you're looking at the stock and pulling up a chart at 170. What I'm going to say at $13 compared to 170, you think you missed it? I think it's a better buy today based on the numbers that you said. But one of the things that I like about this company is when they did this capital raise, and again, they had offered discount because their market cap is about $4.5 billion and they raised close to $500 million. That's a big capital raise for a company, 25% of the market cap. A little bit less than that. So what I like about it is a lot of companies that we see, especially in these markets, especially a company like this that saw its share price go up so much over the past couple of years, what you normally see, Daniel, is on these offerings is you're seeing these, selling shareholders. The shareholders are selling. The shareholders are selling. These guys raised this money, and these guys are not selling. So they're not selling. What are they using the money for? So to further supplement the regulatory capital levels of the company, its wholly owned subsidiary, which is Silvergate Bank, so it's an actual bank, and for other, general corporate purposes, which includes, acquisitions and things like that. But it's, for me, when I look at this name, acquisitions and also leverage, right? Leverage is very, very good when you're in the banking industry. To increase their leverage, which they're probably going to offer like yield farming, things like that. But, and clearing services, these guys are like the one-stop pure play in this industry. And there's other names in the area that you mentioned, another one, which you can give. I forgot the name. What was the other one you mentioned when we were talking?
Oh, I don't have it. It's SBNY is the...
Yeah, so another one that got into crypto, but as a pure play crypto company that's going to see tremendous growth at only $4.5 billion valuation. I mean, this company, it based on the fundamentals, is more of a buy now. When we bought it, it was taking a chance, seeing where crypto was going to be over the next 3 years, and this thing took off. But these guys are clearly becoming the biggest player, the best player in the industry, and I like them a lot. I still think it goes higher. So. Other than that, other news, Daniel. I mean, I don't know. We what about SPACs Trump? Trump SPAC, SPACs, Trump SPACs. You know what? I reversed that before. I don't know if it's because I'm dyslexic, but the Trump SPAC, and the reason why it's funny because, I thought at December 6th, okay, you have these guys announced that, they have $1 billion committed, right, which through PIPE investments, which is normal, right? This is normal. This is what you do. When you announce a merger or, you're building a company, once you do this with one of these SPACs, you go to these PIPE investments, and that's where it gets really fishy. It gets really fishy. And this is why these things were almost outlawed a while ago, and now they came back because, again, everyone thinks it's good, and the retail investor was making money on the backside of this. So it's okay when the retail money, they didn't know that they're buying this for 10, they're selling it for 13, 14. Everyone else is in for $1 and selling it for like 8, 9, 10, 11, So, these pipe deals are done at they're giving away warrants. They don't have to disclose the warrants. They don't have to disclose this stuff. So this is great for Chamaths and all these, investors and stuff. And they made an absolute fortune, just feeding this stuff to retail investors. But here you go. You got the $1 billion pipe on the same exact day, the same day that they announced that. The SEC and whoever else are launching investigations on the company. I love the politics behind it. I know you don't want him to start his own media company. You want to keep him off the media and suppress him, which, again, this is the constitutional right where you have freedom of speech. I think that's amazing. But, I think there's more to this story because, Daniel, if they really decide to do this and they have anything wrong with PIPE investments, you're going to have to apply that law to every single SPAC that was launched. And if you do that, holy cow, because the shit that's under the hood on these SPACs that they didn't have to disclose, and that's why you're not seeing SPACs come out that much because a lot of this has to be disclosed. He said, okay, you know why? Because now the retail investor's getting its ass kicked on these things. I think it's like 65% of them are down from their original, price of $10. You always have to wait to the retail investor to get wrecked, right? So they got wrecked, and now they're like, well, we're looking into this, and you got to disclose a lot of more information, and the more you have to disclose, the more that these things aren't being launched. You're not seeing them being launched anymore, but it's just funny because whatever they do to this, remember, this is an industry. You're going to have to do it every single pipe going all the way back, which I know a lot of these politicians were invested in early on. A lot of these guys have money with certain firms are invested in. I mean, that's going to open up a massive can of worms. I just thought that news was kind of funny. Like the same day they announced that the investigation as, hey, we raised $1 billion in pipe investments.
We've joked in the past about this fits into how there's nothing new under the sun. So in our world, financial news junkies, financial market guys, researchers, et cetera, this is basically our grocery store checkout item. This is where we get to catch up on the People magazines and the headlines and all the drama. And what you left out there is, hell, they got a congressman, Devin Nunes, is taking over as CEO next year. So I guess do you resign from your post?
I don't even know. I saw the news. Yeah. The stock went up on that. But
the stock, remember, this stock comes out, it skyrockets to over $70 a share as basically getting on the meme trading wagon. It's pulled back significantly to under 50. It's now basically, like you said, under investigation, got an ex-congressman who they're politically tight as can be. This is just one of those things where this is the perfect world, as I've said in the past, for Willy Wonka and the Wizard of Oz combination. If you buy this stock, you're basically buying it on the thesis that talk about pricing in success before it. They don't even have anything launched yet. You just know it's going to be media related, whatever that means.
Yep.
But your thesis here is, hell, this is just a connected, crazy, and your biggest potential here is you could be a meme stock, and hell, this thing could go to 150.
No, I know.
But it is entertaining. Like I said, this is our gossip side. You got to laugh at this. If you want to play in that game, treat it as a lottery ticket that doesn't expire as quickly as paper tickets.
Yeah, and you could put results on this, or you could analyze this, because if you look at social media platforms and how many people are on them, I mean, you can go and look at how many Twitter followers that Trump had.
Yeah, that
are going to be tuning into this media platform. Because you look at media platforms, it's all based on daily active users, how many people you have on the site. We're talking about tens of millions of people, if not hundreds of millions throughout the world, because the people that hate him want to listen to him even more. It's like the Howard Stern effect, right? So, it is crazy when you look at it that way. But and I just thought the last part, the last thing I want to talk about, which I thought was funny, is how the Biden administration came out and said that we're going to boycott the Olympics. So there's going to be like no politicians there and stuff like that. I just thought that was kind of funny. I thought that they're not going to send any government representatives to the games, and I'm thinking, like, here is the place that we know for a fact started COVID, that killed millions of people around the world. They lied about it. They didn't let anyone in the country. The WHO, we saw how corrupt the WHO was, right? They said China played great. They didn't allow the WHO in there, and the WHO still got their back. We know where it started. We know it originated. We know it. A lot of whistleblowers have come out. Just what these guys have been doing is unbelievable, and just to have the Olympics there. But our big response from the Biden administration is, we're not going to send any representatives to Beijing. Oh, man, did you just make a bold statement? Like, don't increase tariffs. We have the power to make China a living hell, right? They depend on us, right? We're the largest consumer of things, which means we have the money, right? So they produce a lot of stuff. We could buy it anywhere, okay? It's going to be more expensive if we buy it anywhere, but we have the ability to crush China, and they're not going to sell our bonds anytime sooner. They'll crush their economy, right? We own them completely. It's changing. It's changing now, right? As we're not energy efficient and stuff like that. But, it's just funny that that's the statement we choose to make. And it's a big deal because China accounts for 40% of the world's growth. And this is an economy where you're seeing, right, the supply chain disruptions. You're seeing a pullback. You're seeing the Evergrande situation. I've seen the stats. You're looking at construction is down 36%. A lot of these debt-laden companies are having trouble. They're trying to encourage them to borrow more. And, it's really like a lot of things in China that aren't going right. And we have this is what we want to do. We have them in a perfect position. But, this is the statement that, this is the bold statement that we make. Oh, we're not going to have any that just, what? President Xi, we're not going to have any of our representatives from the U.S. attending your Olympics. Like, that is like the slap in the face to them. I don't know. Maybe it's me.
Well,
we could have done a little bit more than that.
It does seem odd to us common folk, us peon Frank. But you got to remember, we're not part. Well, you're more of the elite, than I am. But you got to remember,
man.
This isn't to us.
Don't tell my wife and kids that. To them, I'm just like a pain in the
But your
ass.
fundraisers you go to and all that excitement now, I mean, how did you get back to Florida this last trip? Just coach anyway.
Yeah, that was pretty cool though.
It's like the Seinfeld episode when they're talking about Elaine and Jerry, who gets the first class. And he says, well, you've never gotten in first class before. She's like, I know. He says, well, you don't know what you're missing. You need to go back there. I've been there. I can't go back to coach. It's funny because from a political standpoint, I agree with you in the sense that I don't, it's kind of funny, but in their world, this is a quote unquote bold move or a serious move not to have officials there and all that. I've read headlines, as I'm sure you have, they're going to retaliate in some way. That all doesn't matter. The big takeaway here for me is, just as a fan of the best and the athletes, is that, you always have something hanging over. The situation is always going to have something hanging over in China. I mean, you can point to any number of things, and I'm not saying we're perfect, so don't, hold your hate mail on that silly stuff. Yeah, I'm not going Ray Dalio here.
No, we involve ourselves in too many.
But my point is that it sucks for the athletes. There's always going to be this over there, and it's just crazy. You don't get to pick when you're born, when you're going to be great at what you do, all that kind of stuff. So that's just that to me it just shows you how politics gets its hands in everything and typically makes everything worse. Real quick, as an investment standpoint, if you want to play China, I think their market's still down about 20% this year.
A lot.
You're right. They got a lot of problems. My only advice there is don't believe anything you read. Just imagine it's much, much worse than whatever they try to admit. But I still think you should avoid it, easily. I think there's plenty of ways to make money for investors that you don't have to. That's the great thing about investing. You don't have to participate in everything. But if you really want to play China, if you buy into this growth model, you need China to keep this world economy and world growth going. Buy ones that bend the knee, buy Nike. Frank, is Nike's stock near its 52-week high? I would bet it is.
I think it's pretty
Tesla
close,
pulled back.
but...
They're big China bulls.
Yeah.
Starbucks is over there. McDonald's has exposure there.
Levi's
if you really want to play
there.
China, play it that way, in my opinion.
Yeah, I'm curious to see what Nike is, because that actually hasn't. It might be near its high, but it hasn't really been doing too much, if that makes sense. So it is near its high. I just want to see like the last 6 months. Like even the last 6 months, I would say the last 5 months, it's really been flat. It's come down a lot, and then we have to miss an earnings, and they came back a little bit, but it's kind of been flat. Where a lot of these other players in that space have really been doing very, very well, reporting great. Hibbett just reported great numbers. You're looking at Dick's Sporting Goods, which sells athletic apparel and things like that, and also Under Armour, which you have in the portfolio, which was good timing on that one. So a lot of names are really, again, it is Nike. They're the biggest in the world. They're the greatest in the world. But right now it could be a good buy. It's near its 52-week high. It's not too far, 10% off but 8% off. But we'll see. We'll see there. And guys, just with China in general, if you have exposure, some stocks have exposure to China. You're right, Dan, but you have to look at I read a lot of these reports, and I don't want to bore you with them in terms of, sell-side reports. So, in terms of the macro environment. And if you're looking at Omicron and even Delta is really hurting China right now, and it's hurting Europe. Europe has a lot of, tougher policies in place, and, you're not seeing that growth come out of there. You're not probably going to see, a little bit longer. The U.S., I think we're fine. We're through this. We're like, okay, we're here, we're going out no matter what. We feel comfortable now, vaccinated. But if you look at those two areas, two developed major growth markets, right, account for, you could say Europe's kind of a growth market, but two of those markets, those major developed nations, they're struggling right now, and you're seeing it. So is it a buying opportunity? I don't know. I know the GDP estimates have been lowered across the board in Europe and China again, and that's from Goldman Sachs, and you've seen a lot of other firms, and those are reports I was talking about that I read that are kind of boring. But that could provide a good buying opportunity. Right now, it's not. But I just think the buying opportunity, Dan, will be in some of the airlines. I think that, once international travel comes back, these guys are probably going to report similar revenue that they reported in 2019 pretty soon, pre-COVID, without international travel, which is insane. That's how much pricing power they have. And these things are still trading. These airlines are still trading at the same levels of a year ago, when a lot of these things were all grounded and the vaccine was just now being distributed. We just now has starting to be distributed. So to me, that's insane where they were and where they are right now. So I think that's a great opportunity. But like you said, find ways to play it even here, because playing these directly, you can really get nailed, because especially in China, because a lot of times you really don't know what the hell's going on with some of these companies and stuff.
Yeah, absolutely. And we've seen Didi, basically the Uber over there, they were asked to get delisted. I mean, that stock's gotten crushed since it went public.
Destroyed, yep.
Alibaba is well off its highs.
Mm-hmm.
Even though you got Charlie Munger, Buffett's right-hand man and business partner, buying that hand over fist, or at least he was a couple months ago as it dipped down. Yeah, I'm not saying it's going away. I don't think there's any rush to gain exposure there personally. But the great thing about investing, as things go down in price, it gets cheaper, because hell, it can only go to zero. So
sometimes they get cheaper. Sometimes they go down in price and they're more expensive depending what they're earning.
Well, that's true. But I mean, I guess risk goes down with price, I should say. Good point,
you could, depending on it. But so we'll be an interesting market, guys, heading into next year. Again, a lot of risks on the table, and you throw in the Fed, and raising rates. Again, a lot of these things we could see right now. What we can't see is those other versions of variants, that are going to happen, overreactions and stuff like that. So it is going to be interesting 2022. I think we're going to see a volatile market like we're seeing right now going into, at least first quarter, second quarter, but it should be interesting. And Daniel, we talked about a lot of new ideas today. I want to, appreciate you coming on. And you're going to come on. We're going to do another one tomorrow, right? So
are we? Yes. Oh, we fly by the seat of our pants here.
So I usually have an interview, but I did have a late cancellation, an apology. That was from the Mooch, Scaramucci, who I had on before, but he is taking a trip to the Middle East, which he actually even said when he was on a CNBC interview. So, they apologized, and that was a late cancellation. And just right now at holiday times and stuff like that, look, we're going to have an interview for next week, and that might be all the interviews for the year. We still going to have some picks in Dollar Stock Club, which would be pretty cool. But yeah, Dan, I'm going to see you tomorrow and we'll break down the markets again, which should be a lot of fun. And, I'll see you then.
All right. Sounds good. See everybody tomorrow.
All right, buddy. Take care. All right, guys, that's it for me. Really appreciate all the support. I will see you tomorrow with Daniel. Questions, comments, for email frank@CurzioResearch.com. That's frank@CurzioResearch.com. And I'll see you guys tomorrow. Take care.